I was popping everybody. Welcome to another educational video. Today I'm going to be talking to you guys about the secret continuation model that I like to take. It's not really secret. It's just something that I picked up on. I didn't learn this from anybody. I'm not sure if anybody else does teach this or trade this, but this is a very effective system that I have, I guess, just picked up on the market over just market experience, and something that I recognize that is very, very effective and has a very, very high win rate. I believe just me trading this system alone, I have like a 93% win rate with it. And I have here a couple of trades pulled up on how the trade actually works. But first, I'm going to pull up my trading view to show you guys just on paper what it should look like. All right, now this works the best when the market is either trending very, very hard to the downside, as we are here, or if we are pushing very, very strongly to the upside, as we are here. Now, these are two pretty much prime examples of what I'm looking for when the market is in heavy trends, because my system specifically that I like to trade mainly for my A+ setups and stuff like that does not really work too much in trendy type of markets. It works when the market is more efficient, we have a lot more data to back, and when we're just moving straight up or straight down, it's very hard to kind of gauge whether or not I'm going to take a valid trade or not. So this kind of helps me be more versatile, but also still be able to profit on the day. Also protects my risk to a certain extent. I'm going to break it all down. So this is a buy example right here. I literally just opened up TradingView, and this is honestly a perfect example. So you see right here, the market is trending to the upside. I'm just going to cut this back right quick. You see here, trending to the upside. Simple. What we are taught, or what for the most part traders are taught, is breaks of structure, changing the state of deliveries, or when you have the market closing through, a previous low or a previous high. For example, if we have a sweep in liquidity, which this candle could be considered right here, this would be your change in the state because it is a candle close through the leg that pushed higher. You see, we have this bullish leg here, then we have a candle close to the last bearish candle that sparked the bullish move. So this would be your change in state of delivery, since this candle is what broke structure or is what displaced through the previous low. Another example of a clean change in state of delivery, you see here, price comes up, we sweep this internal high, we're rejecting out this volume imbalance here, and then we get another body close through with this candle here, another change in state of delivery through that section of candles, form an order block, all of that good stuff. Everybody is kind of taught it differently, but honestly, all of ICT concepts pretty much work the same. They just have different titles. I don't want to overcomplicate it too much, but pay attention to these order blocks when they're formed, and these changes in state of deliveries, breaks of structure, market structure shifts, whatever you want to call it. That's what these are. When you have a body close through a body low, the body low here, which is on this candle, and then we have this candle closing through the body low of it. Another example I will show y'all is, look, we come up, sweep the high, sparked off this move right here. We close through the low with this candle here, and you see we end up continuing back in that direction that we closed to, because originally we were trending higher. You see here the market was pushing higher, then we got that change in the state of delivery to the downside. Most people will mark out as a CISD or a market structure shift or a break of structure, and then we reverse. So I kind of applied that to my continuation trading. When I'm seeing the market in a very, very heavy trend, literally all I'm waiting for is a pullback into a gap, and then the same body close through the most recent high, change in state of delivery, break of structure, whatever you want to call it. So let's say, for example, right here you see price pull back into this 2-minute gap, this 2-minute bullish fair value gap here. My entry would come at the body close above right here. So this change in state of delivery, or this body close through this high, I would enter long, put my stop loss at either the gap low or the wick low, and I'm literally just targeting a 1-to-1. This is a very, very effective and simple strategy that you can trade, especially on continuation days. If you're like me and if your setup doesn't present itself during continuation day, you can take these to still get a small piece of the pie on the day. Now, I never take these with my full risk. My bad, y'all. My audio or my video had messed up. But what I was saying was, I take these trades when we do have very strong continuation days. This is not going to happen every day. You do not get setups like this every day. Now, ironically, we did have back-to-back type of situations where this did work. However, this is not going to be on a daily or sometimes even weekly basis. This will only happen every once in a while when the market is trending in a certain direction and we're just not having any type of retracements or anything like that. this is when I like to use this and capitalize. Now, I did say that I don't usually take this with my full risk. The reason I don't is because I have a specific model to myself that I have back tested upon with years of data. I have not back tested this with years of data. This is just something that I have picked up on a lot more recently, that just my market experience has been telling me, like, hold up, I think I see this work a lot. So I've been trying it out. I've been back testing it, and I'm going to show y'all some of my back tested results from it. I'm going to show y'all one more time, though. This is the sell side version. When you see price trending to the downside, like how we are here, for example, you see here we pull back into this 2-minute gap. Usually I'll wait for a pullback into either just any type of higher time frame gap, honestly. 5, 4, 3, 2, even a 1 minute. This is all effective. It is obviously most effective when you're using like a 5 minute to a 1 minute. However, you can still use a 1 minute gap and a 1 minute change in the state. Really just depends on whatever you're most comfortable with and what you have the most confidence with. I would recommend you backtest this and look for yourself at how this system can work. Don't just take my word for it. Go do your own research, and you can see exactly what I'm talking about. Like I said here, you see here, market is in a very strong downtrend. You can see we're clearly going down. What am I waiting for when the market does something like this? You see here, we do have a pullback to this gap. We get the, I keep pressing this one wrong. We get that change in state right there. We get a body close with this candle straight through the low, and as you can see, let's say I put my stop loss at that candle high, go for a 1-to-1. Yes, we did sit through some drawdown. However, we did still respect that change in the state, so this should not worry you at all. As long as we're still respecting this line right here, this order block that we put in, you are perfectly fine. We can be in drawdown all day if you want to be. Obviously, don't nobody want to be in drawdown that long, but it will work eventually. So yeah, that's another example. Again, even if you look a little bit more down, you see price still respecting these blocks that we're putting in. Measure it out, body close through with this candle. Same thing, stop loss at the high, go for that 1-to-1, and you see it works damn near every time. Now, another example, you see here, we're trending to the upside. Respect the order block, get the change in the state right here. After we pull back into the 1 minute fair value gap, or 2 minute, enter long, go for a 1-to-1. Stop at the low, 1-to-1, 1-to-1.5, even if you want. Whatever you want to see, do that. And that is usually how I manage it. Now, I don't usually go break even on positions like this, or I don't usually set break even points. Now, I will go break even on certain occasions, and I will explain to y'all why once I start showing y'all my live examples from it. But usually how I do it is just based off my market experience and how I've seen these candles open and close literally hundreds of thousands of times. I know how a candle should open and how it should close. When you are taking continuations like this, let's say if I'm taking shorts, for example, if I'm in this short right here, if I'm in this long, I'll just say, I want to see this next candle open slightly lower. As you can see here, we did put in a smaller wick. Let me see if I can cut back a little bit so I can show y'all. You always want to see a candle open in the opposite direction of wherever you entered from. This will always be a positive sign. Obviously, it doesn't sound like why would I want to see the price go opposing to where I want to do? You need to understand OLHC, open, low, high, close. And it's the same thing for the downside. If you want to see the price go down, you want to see it's open, high, low, close. These are systems that also have millions of YouTube videos on it if you want to look them up. OLHC, OHLC. But essentially, this is how candlesticks print the most efficiently. You want to see, okay, we open lower here. You see we put in this bearish wick, but then we end up closing higher. Same thing with this candle. We put in a bearish wick, close higher, put in a bearish wick, close higher. So when I see these bearish wicks get put in and I see the market start to push to the upside, that's usually where I go break even at, because 9 times out of 10, we will not revisit this low. And as you can see, it works almost every time. Now I'm going to show y'all some of my live examples that I have back tested with. Where is my, okay. Show you some live examples that I have back tested with right here. This is my TradeZella backtesting session. This is not a TradeZella ad. I do not trade, or I'm not affiliated with TradeZella. However, they are a very good platform. I mainly use them to backtest now, just to try different things out. I'll show you some of my sessions right here. I'm usually just backtesting with them, practicing different things and getting different shots up. I like to call it, just because I used to play basketball, and kind of like the same thing, getting shots up in the gym. This is exactly what I use it for. Very, very effective platform when you're trying to do that. So these are my TradeZella stats here. Y'all see I do have a lot of time put in, hundreds of minutes a month, 1,000 minutes in a month. Like, I'm doing a lot. So y'all can take my word a little bit. I have payouts on my YouTube. I do know what I'm talking about a little bit. I've been trading for almost 4 years now coming up, so I do know a little bit what I'm talking about. And this is the account that I'm going to be showing y'all my statistics with. Now, as y'all can see, I have right under a 60% win rate, 75% day win percentage, average win to loss 1.1 to 3.2. This was a $10,000 account that I started with that I have grown to 26,000. And what I want to show you guys are some of the trades that I have taken over these, really just these 2 months right here. I think all of these trades are from, or these last 3 months, I mean. So the first trade I have, which is from February 19th, this is from 2024, by the way. Y'all can see the market is trending to the downside. What did I wait for? I waited for a body close through the low. We also had an inversion fair value gap paired with this. Now, when you compare inversion fair value gaps with the change in state of delivery, you damn near won't lose. Now, obviously, you have to prepare to lose, but this is a very effective system that will almost work every time, especially when you're only targeting those one-to-ones, when you're just getting those quick, small scalps, those quick pieces of the pie. With the right leverage, it will build up. Obviously, at first, when you first start out, you'll be like, damn, this small behind trade, I'm not making that much. But as you start to compound, you can grow and just get more leverage on your account. You can afford to risk more on these trades. You will see how quick and easy it is to make money. So as y'all can see, I waited for the body close through that recent low that created that swing leg prior to this is the manipulation leg. You want to wait for the body close through the low of the manipulation leg. That's what I'm trying to think of. The body closed through the low of the manipulation leg. Why is this a manipulation leg? Because we pushed higher before we actually displaced lower. Once we displaced lower, we got that close through, entered for the one-to-one, didn't target any external liquidity, just got my one-to-one, my positive risk reward, and got out. You have to know when to target draws and liquidity and when not to. I take this usually when I don't target draws and liquidity is when I don't really anticipate the best price action from the market or the most efficient price action. As you can see, we never even took that low, so I did take it at a good point. You kind of learn with market experience. The longer that you're in the market, the more you'll be able to tell just like by the day, okay, I'm probably going to be able to get a good draw on liquidity. I'm not going to be able to. And this is another way you can do this is looking at previous sessions. When you just look at, how Asian session was, if we had some crazy sell-off overnight, or if it's like a no news Monday or something like that, you can likely anticipate price to not move as efficiently. So that is when I'm usually targeting one-to-ones. However, when we have the opposite of that, when we had a small previous London session, Asia session, and then, we had lower volume coming into the day, and we also have red folder news, I'm anticipating a larger move. That is when I will go for higher risk to reward trades, but I adapt this based off what the market is telling me and what the world is telling me. Quick little side piece of game. But another example right here, y'all can see a little bit clearer, more clear, very obvious downtrend in the market. What did I wait for? Pull back into a gap. We respected it. We got that body close through. I entered on the candle close, targeting my one-to-one. Very, very simple. Get that pullback. Go for the one-to-one. Just like that, as you can see. And a lot of times when we're trending like this, you want to be careful. That is why I only target one-to-ones, because something like this can happen where you end up getting stopped out after just a small point move. Another way that I measure this out is I will use standard deviation projections as my targets as well. If we are touching a standard deviation projection off of the previous price leg, it is very likely that we'll reject from there. You see we came a little bit short here, but we still ended up rejecting. You see down here price ended up coming down, respecting this range and rejecting. So you want to also be cautious of that. Keep that in mind when you're taking trades like this, because price can't always reverse on you. You want to be aware of where the market is most likely to pivot from, and you also want to look at the draws and liquidity to the left of you, see where the market can potentially bounce from when you're taking trades like this, because you also have to know when to not take trades like this. Now, if we get a trade like that after we just swept a major draw on liquidity, you want to probably avoid it. Obviously, you want to make sure that you're using context. You don't want to just pattern trade this. Use context and use common sense when it comes to taking setups like this. Let's go to the next day. Another very obvious, just straight up downside type of day. What did I wait for? Pullback, swept this internal high up here, pull back into the fair value gap. Inversion paired with the change in the state of delivery. What did I do? Simple. Inversion fair value gap right here. If y'all cannot see, I will highlight that for y'all. Inversion fair value gap here. We got the strong body close through. Also with the body close to that most recent low. What is the manipulation low? The low that sparked the manipulation leg, as you can see, this is the most previous low before price went higher, the most prominent low. Yes, this can count as a low. Yes, you can enter off of this candle. However, based off of my data, my back testing, my conviction, I like to wait for the full confirmation. And as you can see, since we do have a bullish fair value gap here, and we have already sold off a lot of points, I'm not just going to enter off the first go. I'm not going to just fall for the first hezzy or whatever you want to call it. I'm not going to just bite the bullet once it comes. I'm going to wait for until I have full conviction, until the picture is very clear. It's going to be picture perfect before I'm entering. I don't want to just jump the gun. I want to be fully convicted. So I waited for the second change in the state, which came down here. This was the first one that I'm talking about. You could enter it on from if you want to get a high risk reward, but I like to just be more accurate. I know how I trade and how this works most for me. So I go for that full change in state, wait for the inversion as well, and go for my 1-to-1. As you can see, the market did end up continuing to sell off here, but get your piece of the pie. That's it. You're never going to catch the top, and you're never going to catch the bottom consistently. You need to understand that. Yes, you might get lucky every 1 or 2 times, and you might top tick and bottom tick the market, but that is not an effective way to try to trade. You will not do that 100% of the time. What can you do more consistently? Taking base hits like this, get your 1-to-1s, get your piece of the pie, and get out. Simple as that. Another example, as you can see, this all looks like damn near copy and paste. This is February, so this is like around COVID time, 2020, or no, this is after COVID actually. I don't even know. A lot of downtrends in the market though, just from February, March, April, but y'all can see all these charts damn near look the same. Downtrend. I don't even have any long examples here, which sucks, but downtrend. Wait for a pullback into a gap. Go for the continuation after we get that manipulation leg body closed through, which came right here. Enter short. Go for my 1-to-1. I'm in and out like fast food. Simple as that. Next day, another one. Very, very simple. Why is it not? Ooh, we having a couple technical difficulties. Another one, very simple though. Downtrend, we are accumulating here. So what did I fully wait for? Because the actual change in the state was technically here. However, I'm waited for, because as you can see, these wicks are still respecting this previous order block that we put in. I'm waiting for this to get closer because with these wicks, we are still respecting it. I wait for the body close through that. We also close through this low here with this candle. So I'm like, all right, I'm convicted. I'm confident in this. And I believe this trade also had an SMT at the high if I am not mistaken. But you can see I did take this with much lower risk. Every other trade here in the thousands, I'm making, 1,100, 1,200, 2,000. I'm taking it with lower risk. I'm measuring my risk based off my conviction. I'm trying to get a piece of the pie. That's it. So that is why I'm lower risk, but still take my 1-to-1. And as you can see, it played out. These trades are also playing out very fast and affectionately. I cannot talk. Fast and efficiently. Damn. These trades are very fast and efficient, so you want to make sure that you're getting in and out when you should and when you can. But yeah, that is essentially it though. Let's see if I can see a bullish example for y'all. I guess here price is in an uptrend. You can see right here. Manipulate lower, come down, sweep the low, tap the bullish gap. Get that change in the state right here on this candle. Bullish example. Very easy to take advantage of stuff like this. I didn't take this, obviously. This is not, I don't like trading off a market open, but if you do, this would have played out for you. Targeting external liquidity, market open usually does bring a lot of volatility. I don't trade it because there's a lot of manipulation at market open. I feel like I can be more accurate trading after the first 10 to 15 minutes. So that's why I like to wait, but that is a bullish example that did play out. But yeah, I hope y'all did enjoy this video though. I hope y'all did learn something. If y'all have any questions, leave them down below. And I will catch y'all in the next one. Peace out. Oh wait, like, comment, subscribe as well. Let me know what other videos y'all want to see. If y'all have any other questions personally, y'all can join my free Discord, which is in my bio, and y'all can literally ask me anything. I'm available to y'all as much as I can. I don't charge y'all a dime. It is 100% free. And yeah, that's another thing. So, but yeah, like, comment, subscribe. Though we are about to hit, I think, 1,750 subscribers. We're very close. So, pretty cool that we started out with literally 0 back in last like March, April. I was at like 0. I was at like 20 or something. So, pretty cool to grow over this past year. So, I do appreciate y'all. Say thank you. I'm gonna catch y'all in the next one. Peace out.